So what are some of the most, Doug was outlining some of the factors. What do you think are some of the most serious factors that Facebook allegedly tried to cover up?
Yeah, well, and before I get there, I just want to point out what Doug said. This isn't an uncommon back and forth between companies before they go public and the SEC. Frankly, I've seen a lot of these deals where the SEC doesn't do the good work that they did in this case. But the SEC is really trying hard to understand the business. I want to show you some of the dialogue that went back and forth. Here's what Facebook had to say about Zynga disclosure before they actually gave the real information. So in answer to an SEC question, they said, all right, you want to know about how big Zynga is? All right, fourth quarter of 2011 ads shown to users during Zynga apps and Facebook contributed less than 5% of revenues. That's important because that's immaterial. But when they were pushed again, they said, well, revenue from ads shown to users on Zynga apps for Facebook for all of 2011 was approximately 7% of revenue for 2011. In other words, it was 5% for the fourth quarter. It was 7% for the entire year. We dissed basis points earlier, but that's a big change. It's a material part of their business, and I think that's the kind of thing that Facebook was dancing around and not readily disclosing earlier.
So is that a big deal? I mean, look, they have different metrics, right? The average revenue per monthly user, all of this other stuff that's Facebook specific. What was the beef with that?
Well, look, I think it's a big deal because you want to understand the risk before you make an investment. That's the whole point of an SEC filing. That's the whole point of a proxy. That's the whole point of an S1. Frankly, anyone who lost money in the Facebook IPO and didn't read the prospectus has themselves to blame because they didn't do the work to understand the company. If you read the S1, you want to see the risks. One risk is how much they're leaning on Zynga. So Zynga was a great concern there because if someone wanted to look at Zynga and say, hey, Zynga's strong, Zynga can continue to prop up Facebook forever, we love that. But look at, for example, the ad revenues, what we learned about, only because the SEC is insistent, the ad revenues Zynga paid to Facebook are sizable, over $60 million, $80 million leading up not just to the Facebook IPO, let's remember, but to the Zynga IPO. Afterwards, those revenues fell. If an investor looked at Facebook and said, you know what, I'd invest in Facebook, but I don't like this Zynga thing, you might be concerned about a company that relies on Zynga for so much of its revenues. That's why those disclosures are important. A cynic might say that's why Facebook didn't want to disclose it.
Well, why didn't they want to disclose the monthly active user part?
Well, that's another one. So what do the monthly active users show us? So I think that's the right way to look at this stuff. When you look at what the information revealed, not just the back and forth. But here's the back and forth. Here's what Facebook said to the SEC about revenue per user. The company, initially said, the SEC said, please consider providing average revenue per monthly active user. Facebook said, well, management does not rely on calculations of average revenue per active MAU. We don't really look at that. But when we got the numbers, here's what we saw. The average revenue per monthly active user, and I've moved these forward to what we learned about the trend of the company to current date. Those numbers are going down to $2.10 from $2.09 6 quarters ago. And if you look at the growth rate, and that, of course, is the most important thing for a growth stock, if you look at the growth rate, the percentage of growth on a sequential basis, that's bad. 29%, 30%, 3%, 0%, negative 3%. That's a shrinking business. That's not a good thing, and that's one of the numbers that Facebook didn't want to reveal.